Special Report, Drawdown, a deep dive. Updated, June 2026. This special report takes a deeper look at drawdown behavior in the Backseat Trader strategy. The latest dashboard shows an annual growth rate of plus 27.7%, a net asset value return of plus 96.2%, a live gain line of plus 103.8%, and maximum drawdown of approximately minus 11.0%. The updated dashboard provides a useful opportunity to look beyond headline return and focus on the path taken to generate that return. Since launch in October 2022, the strategy continues to show strong long-term progress. The key point, however, is not simply that the strategy has compounded. It is that this has occurred while maximum drawdown has remained contained at approximately minus 11.0%. Drawdown matters because it shows the stress experienced along the way. A return profile can look attractive in isolation, but if the path requires deep or prolonged losses, it may become difficult to follow in practice. Here, downside pressure has been meaningful but controlled, visible, measurable, and recoverable. The drawdown chart shows several distinct periods of stress. The sharpest period occurred around the late 2024 to mid-2025 window, when the strategy moved toward the minus 11.0% low. Importantly, the portfolio subsequently recovered without requiring a discretionary reset or abandonment of the process. More recent 2026 weakness has been shallower and shorter, with the drawdown line weakening briefly but not revisiting the earlier low. This is important because the strategy is not designed to avoid every decline. That would be unrealistic for a Nasdaq-focused equity strategy. The objective is to keep losses tolerable, allow the model to keep ranking opportunities, and avoid emotional intervention during weaker phases. Drawdown control is therefore not about smoothness. It is about survivability and discipline. The trade execution chart reinforces this point. Individual closed trades remain noisy, with both positive and negative outcomes. But the cumulative gain and loss line has continued to rise over time, particularly through 2025 and into 2026. The process is not dependent on every trade working. It can absorb weaker positions, provided the overall system keeps capital rotating towards stronger relative momentum. The Nasdaq 100 market backdrop over the past 28 days has made this especially relevant. AI infrastructure, semiconductors, memory, cybersecurity, and cloud software remain major leadership themes. But recent market action has also shown how quickly crowded leadership areas can correct. June weakness in chip and AI-linked names highlighted concerns around valuation, interest rate expectations, earnings guidance, and whether very large AI capital expenditure can translate into visible near-term revenue and profit. For a momentum-led strategy, this environment is constructive but uneven. Strong leadership can support compounding when trends persist. At the same time, concentrated positioning can produce sudden reversals when expectations become stretched. The dashboard's drawdown behavior therefore becomes a key check on whether the model is participating in leadership without becoming excessively fragile when leadership rotates or corrects. The outlook for the months ahead remains positive, but risk-aware. Structural themes behind Nasdaq 100 leadership remain intact: AI deployment, semiconductor capacity, memory demand, cloud infrastructure, cybersecurity, and automation. However, the market is likely to remain sensitive to earnings results, Federal Reserve messaging, bond yields, geopolitical shocks, and guidance from large technology companies. The practical takeaway is that the current drawdown profile remains within the strategy's observed historical range. Performance has continued to compound, but the more important point is that the process has so far contained downside stress while remaining systematic. This is the balance to keep monitoring, not whether volatility disappears, but whether it remains recoverable and proportionate to the return being generated. Current or recent portfolio exposure includes ARM, MRVL, MU, AMD, and WDC. These holdings are examples of current or recent exposure, not recommendations. Positions may change as the model updates. For readers who would like to explore the strategy, methodology, and supporting market analysis in more detail, additional content is available at Backseat Trader. For audio-visual versions of this update and previous posts, visit our Strategy Commentary archive. Video content is also available on the Backseat Trader YouTube channel. Past performance is not indicative of future results. Investing involves risk, including possible loss of capital.